For over 75 years, the International Monetary Fund has been the linchpin of global financial stability, yet it now finds itself at a pivotal juncture. The emergence of BRICS, Brazil, Russia, India, China, and South Africa, presents a formidable challenge to the long-standing US financial dominance through the IMF. This isn't just a story of economics, it's a saga of power, history, and future possibilities. Here at Mwaki Insights, we'll delve into the rich tapestry of this shift, exploring every facet from historical roots to future scenarios. Let's begin this comprehensive journey. The story of the IMF begins in 1944 at Bretton Woods, where the world, weary from war, sought economic stability. The IMF was envisioned to prevent competitive devaluations and promote international monetary cooperation, playing a crucial role in the Marshall Plan's success. However, as decades passed, the IMF's policies often reflected US economic interests, leading to criticisms of neo-colonialism. Exploring this evolution, from its noble beginnings to its controversial present, examining how it has shaped global finance through interventions in crises like the Asian financial crisis of 1997, where IMF's conditions were both a lifeline and a source of contention. BRICS was born from a desire to counterbalance Western financial dominance. Since 2009, these nations have been laying the groundwork for a new financial ecosystem. The NDB, often termed the BRICS Bank, aims to fund infrastructure and sustainable development projects, reducing reliance on the US dollar. The CRA serves as a safety net, offering an alternative to IMF's stringent conditions. But what are the real capabilities and limitations of these institutions? Their operations, from funding mechanisms to geopolitical implications, have already impacted global finance by providing loans to countries like Egypt and South Africa outside the traditional IMF framework. BRICS's rise challenges not just economic systems but the very fabric of global geopolitics. By fostering economic ties and creating alternative financial structures, BRICS countries are subtly shifting the balance of power. This could herald a multipolar world where economic might doesn't solely equate to US influence. However, this shift isn't without tension. Consider the tensions in the South China Sea or the trade wars with the US. This financial competition could either foster cooperation or escalate into new forms of conflict, creating scenarios where BRICS might lead to a more balanced global power structure or exacerbate existing geopolitical frictions. The economic landscape is poised for transformation. BRICS's challenge to the IMF could lead to a diversification of global finance, reducing the monopoly of the US dollar and potentially stabilizing economies by offering more tailored financial solutions. Yet this path is fraught with risks: currency devaluation, inflation, and possible financial isolation for countries not aligning with either bloc. As investors, we should delve into these dynamics and explore how emerging markets might benefit from less dependency on IMF loans, yet face new challenges like capital flight. Look for investment opportunities in sectors like renewable energy or tech in BRICS countries that could boom due to new funding avenues, and be careful of the worst-case scenarios where financial chaos could ensue if not managed with foresight. While the economic implications of the BRICS challenge to the IMF are profound, it's crucial to understand how these shifts in global finance impact everyday lives. Financial policies and international loans are not just abstract concepts, they have real-world consequences for people across the globe. Consider the scenario where BRICS nations provide more accessible funding for infrastructure projects in developing countries. This could mean new roads, schools, and hospitals, improving the quality of life for millions. However, there's also the risk of increased debt burdens if these projects don't yield the expected economic benefits. On the other hand, the diversification of financial power could lead to more equitable resource distribution, reducing poverty and addressing social inequalities. For instance, if BRICS nations prioritize sustainable development, we could see significant advancements in renewable energy, creating jobs and reducing environmental impact. Yet, the path is fraught with challenges. Social unrest could arise if new financial policies lead to inflation, or if certain communities feel left behind. It's essential for policymakers to engage with local populations, ensuring that financial decisions are inclusive and socially responsible. As citizens and investors, we must stay informed and advocate for systems that prioritize human well-being alongside economic growth. The future of global finance is not just about numbers, it's about creating a world where everyone has the opportunity to thrive. Looking ahead, what future awaits global finance? A scenario where the IMF, World Bank, and BRICS institutions coexist could lead to a more resilient global economy, fostering competition that drives innovation and fairness. However, this future isn't without hurdles. Building trust in new institutions, navigating regulatory landscapes, and ensuring they don't become tools for new forms of dominance. Potential solutions include digital currencies, reducing transaction costs to enhance transparency in financial dealings and ensure these institutions serve global interests rather than nationalistic ones. As we conclude this extensive exploration into the seismic shifts within global finance, it's clear we're witnessing the dawn of a new era. The challenge posed by BRICS to the IMF's long-standing dominance isn't just a financial story. It's a narrative of global transformation where economic power is becoming more distributed and the voices of emerging markets grow louder. The implications are profound, from the potential for a more equitable financial system to the risks of fragmentation and conflict. Yet, within this complexity lies opportunity, the chance to innovate, to create systems that are resilient, inclusive, and truly global in their outlook. As we've seen, the path forward involves navigating through historical legacies and current geopolitical tensions and envisioning a future where financial stability isn't dictated by a single power but shared among many. The solutions we've discussed, from digital currencies to enhanced transparency, offer pathways to a balanced global financial order. At Mwaki Insights, we'll continue to follow this unfolding story, providing insights into how these changes affect not just economies, but the everyday lives of people around the world. We invite you to join us on this journey. Like, share, and subscribe to stay informed and engaged with the narratives that will shape our future. Thank you for dedicating your time to this deep dive. Remember, the future of global finance is ours to shape, and together, we can ensure it's a future of prosperity for all. Until our next exploration, keep thinking, keep questioning, and keep pushing for a better world. Goodbye for now. Bye.